Good morning, folks. It's 8 a.m. here in Chicago on Thursday, the 17th of November, 2022. Thanks for joining me this morning. This is episode number 2360. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm coming at you from my home trade station this morning as I start from home before heading in. This morning, let's dive right into the Convergent Trading pre-market summary sheet. This morning, the market is really mild risk off, mild risk to risk off. As we come into a market that's been selling off, we're seeing energies really selling off as well. Metals. Pretty much, it's a Black Friday sale this morning on everything, except for the U.S. dollar. The U.S. dollar again making gains, very very strong at 107 on the U.S. dollar index, the DX. So risk off. The Philly Fed this morning, the U.S. Philly Fed missed by a fair amount. Came in at negative 19.4 versus negative 8. But housing starts and building permits, U.S. Housing starts and building permits came in slightly better than expected, and initial claims came in slightly better than expected. 222,000 claims last week versus 225,000 expected. One of the key components that came out this morning is the UK autumn statement, which came out at 7 a.m. Eastern U.S. time, in which there was a lot there to speak about in terms of this is the statement that UK's Chancellor Hunt put out. This is essentially the fiscal view on taxes, spending. It's a whole big long statement. If you're a part of Convergent, please go to your news feed, the CT news feed. Go into scroll down to 7 a.m. 7 a.m. Central, 8 a.m. Eastern, and there is, or 6:35 actually, and there's a big summary of what was said there. There definitely there's some austerity going on, and the market's responding to that. So also Fed's Bullard came in and this morning and said that the rate hikes to date have only had a limited effect on observed inflation. I want to repeat that. Rate hikes to date have only had a limited effect on observed inflation. Says even dovish assumptions about the state of monetary policy warrants further rate increases. A very, very hawkish statement here, and so again, the market's responding to potential yield changes. So that's what we're looking at as key. The other piece is the Republicans took the House by, I think, 6 seats or so. FTX, more and more news, more articles coming across on that. Just a complete disaster. Seems like very few people knew what was going on with customer funds in there. A lot of people are very, very angry, and the bottom line being that the market's toggling between pricing in potentially lower yields, but also softer growth, which means a lower earnings potentials for stocks. Looking forward, we have Bowman, Mester, Jefferson, Kashkari again, and Evans. We have a Fed parade this morning, and I'm going to let you go find a calendar to note the times, or you can note the times from the CT pre-market summary sheet here, which you can also get on twitter.com/conv trading. You can grab a screenshot of it every morning before the Trader Bite starts. Switching over to the the ES. The market condition currently in the overnight session is trending. We are near lows. We have shifted the point of control to near lows as well. Point of control much lower than the last few sessions. This is the turn I've been talking about for a couple of days now. The point of control at 39.26, the low at 39.13. Those of you who were here yesterday, I don't know if I talked about this during Conversion Trading's trade talk, or if I talked about it in the morning. I don't remember. Yesterday's trader bet was really long. But I talked about 39.20 being a key test, which we took care of this morning, a key test. And if that doesn't hold, then we're looking at 38.90. And if that doesn't hold, the equilibrium point, the next equilibrium point will be 38.50. 38.48, if you recall from that TPO chart I've showed you in the past. I'll bring that up. Pretty good range this morning, expecting it to be expecting it to be a relatively active day. We do have a gap. Gap rules apply this morning, so we're looking for how the market treats this gap, if it tries to respond by pushing up, or if it continues and we have a gap and go situation, which will likely get us to 38.50 today. That's well within range if we open and are unable to turn back up. That's what's key today. Let's take a look at the charts here. So big picture. So now we can pull these into a single profile since they're overlapping each other. Here we go. So we're creating a new composite. Look at how sharp this is. And look at where that 39.91 against the 39.95 being yesterday's high. Look at where that is, the point of control here for the last several days after the breakout higher is yesterday's high, basically. I'm going to pull this in as well. And there you go. What we have here now is a very sharp kurtosis here on the profile, pretty significant or very, very noticeable resistance now above, and we are trading well below it. We're trading down here, settlements at 68.50, and we've basically moved back into this very big balanced profile. So again, I'm going to go over these expectations, this auction market kind of methodology, in that once we get into a prior profile like this, especially if it's balanced, we have to give credence to the value area high, which is 38.77. I do have a level at 38.90 right in here, but if it takes out 38.77, we have a very high probability to get down to the point of control, which TPO wise is 42.50 and volume wise is around 38.47. Call it 38.50. So it's really important today to watch, since we're back into the profile, it's important to watch how it responds into this 38.77. It brings us to this gap low area as well. And if it takes that out, then it creates an opportunity for another 30 points lower in the ES. So we have moved away. Yesterday we closed relatively weak. We were very balanced yesterday, and then today we have a significant gap of about 50 points. So to me, this is pretty weak, and there's a lot above us that can act as resistance. We still have single prints from 39 to about, I don't remember, 39 to about 48 or something like that. So there's a lot above us. So I expect it to have a really hard time moving back up. It's kind of a hint at today's polling for charity. So this is the composite TPO charts. These are major balance areas that have been combined together. This is the actual market profile chart here, as most of you know it in your platform, and we are trading right in here in this balance from the breakout day last week, which was last Thursday, and the low is vulnerable here. Okay, so This is what we've got today. We are looking, the most important thing you should take away from today is how do we treat the gap on the open? Do we come in and see these as lower prices, as cheaper prices, and then respond back higher? Or do we make a feeble attempt at buying up these lower prices and then seeing and then getting initiative selling that is away from the most recent balance, which is up here? Do we get initiative selling to go and test everything at the 38.90 that I mentioned and all the way through to 77? And if we can't hold the 77, then we're looking for 38.45, call it 38.45 or so as the next target. Okay, so the way this looks is we are here. Do we respond? So I'm going to put a question mark on it. Do we respond? If we do, we have some resistance areas. We've got the 39 to about 48 here, these single prints. Then we come into these lows. Okay, and then we come into that profile I showed you in the other screen with a very sharp kurtosis up here at 39.90. Okay, so there's a fair amount of resistance is what I'm getting at. And so if we do get responsive, we want to see the quality of the buying. Do we buy? Do we lift? Remember, I've been talking about how the delta is just not participating in these rallies. It's just very poor delta on every push higher. Remember, I've been talking about that for the last several days. Like, hey, watch out. This is not good progress in terms of buying. They're very, very weak on the buy side, and I'm expecting it to turn, and it didn't because PPI came out and blew that idea out of the water a couple of days ago. So here we are. We resumed that same idea. We have a nice rounded top here, and so I anticipate resistance as we push higher. The expectation really is that it tries to push higher because prices are cheap for some, and then I'm expecting it to turn over and start working itself down into the low, and where the gap is right down here, 38.77, 71, and once it gives this area up, 77, which is the value high of the last big composite area, once it gets down in here, what does it do? If it does not hold on to this area, then you're looking for it to trickle very quickly down into 38.45. This is what the price action is saying. These are not my prescriptions based on a Ouija board or whatever. This is just simply what is technically being provided by the auction currently. Okay, so let's take a quick look at the overall picture profile wise. So you can see that there's poor structure right here. Pretty poor structure right here. Very poor structure from CPI. And I want to remind you, the CPI SOC, who wants to punch into the chat what an SOC is or provide a link to Convergent Trading's glossary. This is the SOC for CPI. You got to keep this number in your back pocket. That is a key area for the market to resume its normal auction. And essentially, if we get back down there, there's actually an attraction to this price, a natural attraction to this price. There's a natural attraction to this price, and if we get back to this area, we're discounting the CPI, and we do have a problem with the fact that the market is really technically and deeply weak despite this quote-unquote good news from the Fed. Okay, so this will be the ultimate goal. Just remember, 37.65 is where the normal auction that was occurring before was interrupted based on CPI last Thursday, and then we started to push up. You can see there's very poor structure on the way up. Okay, so yesterday completely balanced, very tight profile, right inside of the prior day, and we talked about this yesterday. Triple distribution profile. We found ourselves in the lower distribution. We didn't go anywhere yesterday. We didn't make a lower low, higher high, or anything. We just traded that lower distribution and this composite kind of acceptance area here at 39.80 volume wise, and now this morning we have fallen out of this space and moved down into these lower prices. And look at the volume down here versus what's up here. You can see there's very thin structure all the way through. So I expect this to slide down relatively unabated this morning, especially given how the flow of delta has been for the last several days. So here's another view of this, again, to re-emphasize the importance of delta. Delta can be misleading, but the importance of delta is that as price, recall the profile yesterday looked like this, right? So it was a completely balanced profile, but look at the aggression. The aggression was all selling yesterday. So these are multi-day hints that something is structurally wrong with the way the price action is moving, and it's not being supported by aggressive buyers or sellers. So that's the key. Anyway, I want to keep this TV short. This morning, let me pull this down. This morning, price action lower, delta lower. Delta's tracking the small lots mainly, so we're very likely to see a response on the open to rebalance as larger lots come in on the open. But this is what it's supposed to be like when price. So people pay a lot of attention to price, but price and volume go together. You know, you can't have a fire without an energy source and oxygen. You take away the oxygen, the fire slowly dies away. So even though we might have something that burns, if we don't have oxygen, then we don't keep burning. And that's what volume is. Volume is that thing that facilitates the burning that's going on in price. And if it's going in the opposite direction, price can continue moving. I'm not going to mislead you there. Price can continue moving as delta goes down. So you can't just look at delta and say, oh, it's going down, I better get short, because it can move up on thin volume because offers can pull and prices can keep going up because sellers expect to get better prices. So they pull their offers and they put them higher even though delta is not participating. And so you have to observe delta kind of over several periods, several sessions to understand how effective the price action is being. Effective price action is price and delta move in the same direction. This is more meaningful, okay? Except, you know, during rollover where the delta just gets blown to hell because of the rollover. But I know that's very technical and I might have lost you in that, but it's really important to understand that distinction. And then who controls delta is also important. Is it tracking small lots? Is it tracking large lots? It hardly ever tracks very large lots, but who is in control of that delta? Small lots, as we would always expect overnight. So we expect some sort of corrective behavior as we come in. In other words, it's likely to respond to the upside. You can see that the large delta is already buying. And so we expect it to kind of flush up a little bit. Let's take a look at, so not much here, active. Here's what's going on. This is another clue right here. In order for this print to take place, this 500 lot print to take place on the orders, on the order flow, in order for that to take place, there had to have been a bid there to absorb it. Otherwise, it cannot print. So already we're seeing some buying interest coming in right before the open. So I'm expecting this thing to move back. Where am I expecting it to go? The natural place for it to go, given the separation between the full session VWAP, current prices, the overnight point of control, I expect it to move towards full session VWAP, but Full session VWAP is at 39.50-ish, a significant figure. I expect it to really stall out in this 39 to 48 area that I mentioned before. 39 former single prints, still single prints. I expect that there's a response to come in and sell this against the 39.40 area this morning, and then to start rolling over. I expect it to take out the 3900 to 3890, and if it cannot hold the 3890, then we're looking at the 77, 71, and then finally the 3850. It's a lot to cover. I want to remind you to go vote. Please take a moment to vote. On Tuesday, we took your votes. We put the positions on. We won on 2 positions. We lost on 2 positions, and we couldn't get filled on the last one because the market had opened in these large gaps on Tuesday. So not an ideal situation for these event contracts. Again, we continue to do this to raise money for St. Jude's Children's Hospital, and it's a charity event that EdgeClear is sponsoring. $10,000 are in an account, and they're being traded through these event contracts just because it's a small $20 cash contract. And I would like you to vote. The link to vote is in the live chat. It's on Twitter as well, under EdgeClear, as well as myself. And please take a moment to vote, and we'll put these trades on. We'll put these trades on for you. These are the settlements. So we're comparing settlements. The market's at 39.17. We settled at 39.68. Okay, and so we have to find a settlement price that's as advantageous. If your votes are to sell, then we're going to look for a settlement price that's advantageous for each one of these, and put these trades on and close them for 1 hour, for a 1 hour return, as we look to raise money for this charity by trading these event contracts. Good luck today, and I'll catch you tomorrow. Don't forget to vote. Take care.